Futures calm this morning following a new highs for the Dow, S&P, and NASDAQ. Joins us right now is Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. Okay, so here we are. We're on the back of this big Nvidia news. A lot of people excited about that. I don't know. I'm actually curious, before we even get into everything, how excited or not are you about that news?
Oh, it's transformational. I mean, this is incremental $350 to $400 billion for Nvidia over time. And, you know, the time frame is obviously to be determined. But this just reinforces all that's going on in AI. The biggest question, Andrew, I get from advisors and clients is, are we in a bubble in AI? And when you have companies that are spending this kind of money, but many of these companies spending, I mean, Oracle is going to see $300 billion from their OpenAI transaction. And so you have all this money pouring into the sector, but it's not just technology that's benefiting. If you look at the industrial companies that you and I have talked about for the last 3 years, you know, the Quanta Services, Eaton's, Vertiv, Vistra, all these companies are also going to benefit. And then you look at utility companies, they're going to benefit.
Right.
So it's kind of across many different sectors within this landscape. And so that's why I don't think that we are in a bubble, because you have so many companies telling us how powerful this is, pun intended.
Right. I think the reason that people think of it in the context of bubble is, A, just the amount of money that is rushing in all at the same time. And the other piece is that so many of these businesses, at least some of them at least, the end customer, if you will, are not profitable businesses. And so you have this build out taking place that's being funded by companies that ultimately don't, at least in this moment right now, technically have the cash.
On the technology side, it's definitely mixed. There are some companies that are seeing monetization. Look at Broadcom. That's why actually that stock has done better than Nvidia this past year. Look at Oracle. Look at Meta. I mean, and Meta, by the way, the stock has done nothing in the last couple of months. I think that stock should be much, much higher because they actually have been seeing monetization. They have pricing power. Their price per ads are going up 10% because of AI. So to me, there's the haves, and then there are some companies that are not yet anyway. But it's not all that are not making money. You just got to be very particular. And all the other companies I just mentioned on the industrial side, they sure are profitable. And so here, by the way, you know, AI, you need data centers. We don't have enough of the data centers. We only have 11,000 around the world. We need much more. And then it's all about the grid, too, right? The grid hasn't been really invested in incrementally. So you're going to need to do that part of the story. And then, of course, with the power, obviously, we've all been talking about that, how we're undersupplied. So there's so many pieces to this story, and there's so many ways to invest in it.
When you think about where the market is right now, we're effectively at all-time highs. Where is it at the end of the year? You could, by the way, the only way to get to higher numbers is to be at all-time highs to begin with. So I don't want to tell people that we're too high, but there's always the question.
Yeah, the market is expensive. There's no question about it. But you're seeing earnings growing at double digits. We just grew earnings 11%. Expectations were for 5%. We have only 3 more weeks until we get third quarter earnings. And I think you're going to continue to see double-digit earnings. Free cash flow is very important to me. It's running up about 14% year over year. And the big surprise for many people, not me, because I've been talking about it for a long time, is margin expansion. We have been seeing substantial margin expansion across a variety of different sectors. And that's a function of pricing power. That's a function of restructuring, reorganizations within companies, just companies doing best in class. And, oh, by the way, also productivity tied to technology. So I think all of this, earnings are growing like this because the economy is continuing to do pretty well. You're running at about 2.5% to 3% in GDP. The consumer continues to spend. Remember, retail sales last week came in at 4.8% year over year. Manufacturing, we just talked about all the AI data center stuff. And now you also have a Fed easing cycle. So the economy is doing okay, and that's leading to better earnings. And so, yeah, stocks are expensive. I think the numbers, the E is going higher. So therefore, it doesn't look as expensive on an absolute basis.
The E is going higher. That's going to be my line today.
That's not a number.
It's going to be my line today.